Hi everybody, this is Ospreyeye from MyChartCoach.com, and we're taking a look at ticker symbol DRYS. Okay, DRYS is back in play today. It closed up 23% in regular session and was up big in after hours. There was some news out after hours that got the share price running. And if you look at the chart here, you'll see that it's been in this nasty multi-month downtrend ever since this legendary run back in November when it hit, I believe, close to $100, and then it pulled back and it closed on this day below the middle Bollinger Band, and that's when this downtrend started. And notice how the candles have failed to break middle Bollinger Band resistance the entire time. And during the whole pullback, the candles have been riding EMA4 resistance lower. And so what we've been looking for is for a break above EMA4 to signal that that DRYS is back in play. And if you see here, it's currently at 311 is the current level to break. And now in after hours trading, DRYS hit 359. So it looks like there's going to be a gap up open above EMA4. If you notice down here, there's this monster volume spike. Look at the huge money behind the move. So there were a lot of players loading before the after hours news. So you know that these kind of plays when there's big dilution and there's bad financing and you know there's lots of reverse splits and lots of stock offerings. People always know the news in advance. It just always happens. And so this happened again, and people were rewarded after hours that held. Now at 359, if you look at this chart here, you'll see that there was this is a closer look at this is a 1 month daily chart, and notice there was this gap on the chart. So now it looks like there's going to be a gap above that level, and the next key level to break on the daily chart is going to be the EMA 8 at 543. So that's going to be the next big resistance level on this chart. If it can run to 543 and break that, that puts 889. Okay, if the share price fails to break 543 and it pulls back, you could see a gap fill because there's going to be a gap between this white candle and the next candle that forms tomorrow. So you know you always have to be beware of a pullback with a stock like this. Okay, so now today a bullish reversal pattern did form. Bullish harami. That's an old Japanese word for pregnant, and it's a white candle inside of a what we use for our charts is a red candle. And so yeah, notice that this is a bullish reversal pattern. So now we will be looking for bullish reversal confirmation, and with the gap up open, if there is a white candle that closes end of day, that would be confirming the pattern. So yeah, so what we're going to do now is look at the 15-minute chart, since it looks like it's going to be the big gap up open. We can look here at what some targets could be on the intraday charts. We like to use the 15-minute chart, and if you notice here, the close today was giving you signals that it was in play. This was really interesting. If you notice that you know there was this nasty downtrend on the 15-minute chart. Once again, the candles are below the middle Bollinger Band, and then today it picked up with this big volume spike and it got above the middle Bollinger Band, and we're thinking, okay, DRYS may be making a move, and what we were looking for is a break above the 50 moving average, and it had failed to do that, and it pulled back below the middle Bollinger Band, and it looked like it was going to be typical DRYS, where it was going to you know close bearish. For us, closing below the middle Bollinger Band on the 15-minute chart is bearish, and it makes a dead cat bounce play like this a risk to hold, because that's what this is. This is a dead cat bounce, and so it's always a risk to hold a dead cat bounce if there's a bearish 15-minute chart. But if you look here end of day, this is really interesting. Let's look at these 5 white candles that formed, and notice how this candle right here broke above the 50 moving average for the first time for many days. And so people were loading heavy into the close, and with the close above the middle Bollinger Band and the 50 simple moving average, that was a signal that there was more upside potential. It actually was putting DRYS in play with the bullish reversal pattern on the daily chart, and then the bullish setup here on the 15-minute chart. So to me, you know, this loading into the close and this break from looking like it was going to be typical DRYS and it was going to sell off. I mean, obviously it looks like some people were in the know that there was going to be after hours news, and lo and behold, right after hours there was a you know announcement was put out, and then the share price ran up 50%. So all these people that loaded, you know, millions of dollars worth of stock before the announcement made out big. So yeah, it's always the people with the best knowledge always seem to be ahead of the game. And yeah, if you look here, so what we're going to do now is look at where the potential resistance levels are. If you, this is the after hours closing price at 359. So look at where it closed today, way down here at 246. So there's going to be a giant gap up open, more than likely, unless it pulls back pre-market, which it could do. You know, you never know with a stock like this; it could end up closing red. We have no idea what's going to happen, but it looks like it's going to gap up open tomorrow. Is if the bullish momentum continues and it actually goes up higher, you know, it's just going to create a bigger gap, and that's going to create a giant space on the chart. And a stock like DRYS is notorious for filling gaps. So you know, it may not fill today and it may not fill tomorrow, but that gap will eventually fill if there's one created on the chart. So just know that, and just know that it's going to be a risk to hold for any period of time. You know, this is for most people, this is just a day trade. You want to be in and out, and the name of the game is don't get caught holding the bag, because if you do, you could get severely burned. Just look at the first daily chart. You know, this thing is nothing but a bloodbath. All they do is sell shares. Okay, so this is a very risky trade. The next level to break, if it opens up here at 360 or above, is going to be this 200 simple moving average at 487. You're going to want to see a break above that. If it gets above 487, then you're looking at the 300 simple moving average at 775. Okay, so our theory is that there are no bad stocks. There are only bad entry and exit points. Okay, so every dog has its day, and this is DRYS day. All right, so this is happening right now. So you know, you never know how high they're going to run it. What you got to do is you got to follow the charts. And if this 15-minute chart is bullish and candles are riding above the middle Bollinger Band, and they're staying above this 50 simple moving average, and it breaks above the 100 and it holds that, then that's going to signal more upside potential. If you see a pullback from 359 below the 100 simple moving average in the 15-minute chart, that's going to signal a potential gap fill and drop back down to this 50. So yeah, yeah, this is going to be big in play tomorrow. There should be lots of volume. Trade wisely, and you know, the saying is to you know, be sure to always lock in profits when they're on the table. If you don't take profits, somebody else will. Okay, if you enjoy viewing this video and you'd like to learn more, check us out at mychartcoach.com, on our YouTube channel at mychartcoach.com. Thank you.